Okay, so here I want to talk about question number 3 in homework 2 as an example to show you how to solve questions on the free cash flow and the financing cash flow. Based on the results, I found that many of the wrong answers are related to to the incorrect signs put on the cash flows. So I want to first talk about how can we assign the correct sign to the cash flow. So we know that free cash flow equals free equals operating cash flow minus the change in operating working capital minus change in gross fixed assets. So then operating cash flow equals EBIT. Then we add back depreciation. And then we deduct taxes. Right, so and the operating working capital, that's defined to be current assets minus non-interest current liabilities, non-interest-bearing portion of current liabilities. And so basically the interest-bearing portion of current liabilities refers to the notes payable. So the non-interest-bearing portion of current liabilities simply means current liabilities without notes payable. And so then we need to do the change on this variable. We need to do the change. And then the change is simply operating working capital this year T minus operating working capital last year, T minus 1, subscript. So, and finally the change on gross fixed assets. So here I want to point out the sign. So EBIT, obviously that's positive, right? That's operating income. And depreciation, notice we add back depreciation here. So depreciation also has a positive cash. It also has a positive sign. And taxes, obviously that's negative. So operating working capital, notice to do the change, we simply do the change on current assets minus the change in non-interest bearing portion of current liabilities. So then notice this negative sign, minus sign in front of the change on operating working capital. So if you plug in, so let me plug in this, the change in operating working capital equals the change in current assets minus the change in non-interest bearing portion of current liabilities back into this formula here. So let's see what happens. Okay, free cash flow equals operating cash flow minus the change on current assets minus the change on non-interest current liabilities, and then finally minus change on gross fixed assets. So, and then That equals operating working capital minus the change on current assets. And then you have this minus, here, so that becomes plus the change on non-interest current liabilities minus the change on gross fixed assets. So I want to point out, because now you can see the sign before the change in current assets, that's negative. So that means once you found out the change in current assets, you put a negative sign there. So this means it's the negative cash flow. And for the change on non-interest bearing portion of current liabilities, we have a positive sign. So that means this is the positive cash flow or cash inflow. And this is negative, right? The change in gross fixed assets. We have a negative sign here. So this is negative. So now you have some basic idea about how we can put the correct sign in front of the cash flow. Let's get back to this question. I use the balance sheet and income statement. Basically, if I click on here, I can see 2 years balance sheet and 1 year's income statement, basically. For Abraham's manufacturing company to compute the firm's free cash flows and financing cash flows and interpret your results. Additional information: only entry in the accumulated depreciation account is for 2012 depreciation. And number 2, the firm paid 20,816 in common stock dividends during 2012. So let's start from operating cash flow, right? Based on the drop-down menu, after-tax cash flow from operations. So let's say we know we should find the numbers to calculate the operating cash flow from the income statement. So let me start from the income statement operating. We further start from operating income, which is 55,000. So that's the number I should put operating income. That equals 55,000. And then the second one is that we know it's a depreciation expense, right? Depreciation expense. Based on our discussion, this one should be positive. So go into this table. It's 27,000. 27,000. And then we have the taxes. So the taxes should have a negative sign in front of it. Where is the tax on this table? What tax is here? 16,384. So 16,384. And then we have a negative sign. Okay. So then we can calculate after-tax cash flows from operations. So now let me get my calculator. We just need a scientific calculator, but of course you can use the financial calculator if you want. 55,000 plus 27,000 minus 16,384. So that gives me 65,616. 65,616. So that's the first part of the free cash flow. Second part is the change in net operating working capital. So as we said, going back to the formula. The change in operating working capital equals the change in current assets minus the change in non-interest bearing portion of current liabilities. But then don't forget about the sign, as we just discussed. The change in current assets should be put a negative sign in front of it, and the change in non-interest bearing portion of current liabilities should have a positive sign in front of it. So first, the change in increase in current assets, that should be negative. So let's get that number from the balance sheet that we need. The balance sheet. Now we need the 2 years data because we need to do the change. So we have the total current assets for 2011 and 2012. Then we can do the change. So the change is simply the 2012 number 291,000 minus 275,000, and that gives me 16,000. So that's positive. That means I should put a negative sign in front of it. So 16,000, negative 16,000. And then the change in non-interest bearing portion of current liabilities right here. Then we go into the balance sheet again, and non-interest bearing basically means accounts payable and accrued liabilities. So that here we don't have any interest bearing, so all the total current debt is non-interest bearing. So we can just do the change for the total current debt, which is 0 in this case. There's no change, so just put 0 here. And here we don't have to worry about sign because it's 0. So the increase in net operating working capital is simply the sum of these two, because we already took care of the signs. So we just need to sum them up. So that gives us negative 16,000. And finally, we have the change in gross fixed assets. That stands for the purchase of fixed assets. And based on our discussion, we should have a negative sign in front of it. So let's find out where is the fixed assets. So here we have the gross plant and equipment. That's basically the gross fixed assets. So we just need to do the change. So that's gonna be 307,000 minus 238,000. That gives us 69,000. So then again we should put negative sign in front of it. So it's negative 69,000. Hence, free cash flow is simply the after-tax cash flows from operations. Now, since we already took care of the sign, so it's just to sum up the other two numbers, the increase in net operating working capital and the purchase of fixed assets. Just sum them up. So then we just 65,616 minus 16,000 minus 69,000. That gives me negative 19,384. Just negative 19,384. So this negative here means that the cash inflows are less than the cash outflows for the firm. So that also means investors have to pay the firm in net for the cash flow. So that's the first part of the question. So let me check my answer to see whether we got the right answer. Check the answer. Yes, nice work. So let's continue to the second part, which is the financing cash flows. So free cash flow basically means the cash flows which can be freely distributed back to the investors. So financing cash flows is looking at basically the same cash flow but from a different perspective. So free cash flow is looking at the cash flow from the firm's perspective, but now the financing cash flow is looking at the cash flow from an investor's perspective. Actually, more precisely, it's also from the firm's perspective, but it's looking at how much of the free cash flow actually flows to or from the investors. And here investors include both shareholders and creditors. So the shareholders' cash flows may include the dividend. So from the firm's perspective, of course, by paying the dividend for the firm, it's a cash outflow, so we should put a negative sign in front of it. And the cash flow to the shareholders may also include the new issuance of the common stock, or the repurchase of existing common stock. So if the firm issues more new shares, that means the firm is collecting money from the shareholders. So for the firm, that's a positive cash flow. And those are the two cash flows to shareholders, and the two cash flows to the creditors. Of course, the first one is the interest expense, and for the firm, that's a negative cash flow. And similar to the shareholders, the firm can also issue more debt. So if the firm issues more debt, then it's collecting money from the creditors. So for the firm, that's also a positive cash flow. So with this discussion in mind, let's go to the financing cash flow part. So first, let me just get the here we also have the preferred stock. So we have both common stock and preferred stock. So we have the common stock dividends. We also have the preferred stock dividends. So let me first get the preferred stock dividends. Okay. Now let's go to the income statement. Preferred stock. Dividends, that's 11,000. Again, we should put a negative sign in front of it, because the firm pays cash flow, pays dividends to the preferred stockholders. And for the preferred stock, we can also have the increase in the issuance of preferred stock. So increase in preferred stock, and that we can find from the sometimes this is very slow to react, from the balance sheet. So the balance sheet, we have a preferred stock for 2011 and preferred stock for 2012. So 2011 number is 0, so 2012 number is the increase, right? Just the difference is simply the number for the 2012, 125,000. So as we said, if the change is positive, that means the cash flow is positive, right? Because the firm is collecting money from preferred stockholders. So then we have the common stock too. So common stock dividends. This part actually requires the problem actually gives us that number, additional information. So you can just put this number. The firm paid 28.16 in common stock dividends during 20. So you can just put this number here. 20. Again, it's a negative number. Otherwise, we can also figure out the number yourself. Yeah, we'll talk about it in the next question how to do that. Next one is the increase in common stock. Here, actually, it didn't have that choice, but you can notice that based on the balance sheet, there's no change in the common stock, so that number is 0. Anyway, I guess that's the reason why you don't have that option for the financing cash flows. Otherwise, you should also include the change in common stock, because that's also part of the financing cash flows. So that those 3 items are for the shareholders, and for the creditors, we know we can have interest expense, and for the firm, that will be a negative cash flow. So we can find that number from the income statement. So let's get the income statement. Interest expense, that's 3,800. So that again, we should have a negative sign for that. And then other than that, we can also have, similar to the shareholders, we can have the increase in the new debt. Here actually we have the repayment of long-term debt. So let's see why we have the repayment rather than the increase. I guess the reason should be the firm, the new debt has decreased, and you can see that the new debt basically means, because there's no notes payable, otherwise we should also include the notes payable portion of that. But here there's no notes payable, which is the short-term liabilities. We only have a long-term debt, and that's mortgage payable. So mortgage payable for 2011 we have 70,000, but it drops to 0 for 2012, which means that the firm no longer has that. So that's why we have the repayment of long-term debt, and it's going to be 70,000. So if the firm pays back the creditors, so for the firm, that's going to be a negative cash flow. So we should have a negative sign in front of that. 70,000. So then the financing cash flow is simply the sum of all these numbers. Let's find out what's the final result. It's going to be 11,000 negative plus 125,000 minus 2816 minus 3,800 minus 70,000. That gives me 19,384. Actually, even without calculation, you should already know financing cash flow is simply the negative of free cash flow. In other words, the sum of these two numbers, free cash flow and financing cash flow, is always 0. So if you know free cash flow, you can directly figure out the financing cash flow. Of course, you still need to figure out the individual items within financing cash flow, like what we are doing here, but the sum has to be equal to the negative of free cash flow. You can actually take this as a way to check whether you got the right answer, and based on the information here, it looks like we have got the right answer. But let's double check that with the check answer option here. Yes, we're done. So I guess that's it for the is that all for this question? Oh, and interpret your results. Yeah, the final part is that the firm generated positive cash flows from operations, which were more than, actually this is a typo, it should be than, not then, more than used to invest in additional working capital and fixed assets. So let's break up this sentence one by one, because this is the final part. The final question is above statement true or false. Okay, so the first the firm generated positive cash flow from operations. Is that part right? I think so, because based on our calculation, after-tax cash flow from operations, that's a positive number, so that's correct. And which were more than used to invest in additional working capital and fixed assets. So that's basically saying that after deducting the change on operating working capital and fixed assets, whether the free cash flow is positive or negative. And it seems that after deducting the two investments, free cash flow becomes negative. So this is also true, right? Because operating cash flow is less than the sum of the other two. So that's basically what this sentence is trying to say. And this resulted in negative free cash flow. That's true, which had to be covered by acquiring more money from preferred stockholders. That's actually true if you look at the financing cash flow, because the only positive cash flow is from the preferred stockholders. All the other financing cash flows are negative. So the whole sentence, the whole paragraph actually is true, because every bit of the sentence is true. So we should choose yes. True. So final check. Good job. Okay, so that's it for the question number 3. I hope that by now you may have a better idea about how to solve questions on calculating free cash flow and financing cash flow. And also, I think the key is that you need to understand the sign in front of the cash flow, as we based on our discussion here, all this comes back to the formula. Okay, so that's it for this discussion.